Traders, welcome back to the channel, and chances are if you're here you watched my first Torchlight video. Now in that video I was really going on why I did not like Torchlight. I understand the reverse merger is happening, I understand they're merging with Meta Materials, I understand the main purpose of this is primarily to exceed and grow the business of Meta Materials. Torchlight is really just dying, the oil part of the business, and if you look at how the merger is happening, it's a reverse merger. Only 25% of the company goes to Torchlight, 75% retains with Meta Materials. And it's very much benefiting Meta a lot more than Torchlight. But I'm going to break all that down. I just want to clarify some very key points. In my last video, I don't think I went over the long-term viewpoint of this well enough. I had a lot of questions regarding the very short day trade and short-term swing trade of this position and why I necessarily did not like Torchlight. If you're going to go into this, I said I like Meta Materials more based on the charts and based on the overall growth of the charts. You can see very, very clearly, which we're going to get into here in this video. But let's skip all the introductions. Let's just get to the content. Okay, so hopefully I can make this video very, very quick. So for the first thing I want to do is go over the charts because this really just tells the whole story. So as we look, this is Torchlight. This is the 4-hour chart. We can clearly see since February 19th when that dip started happening in the Nasdaq, it went down. It was heavily affected. Most stocks were. Now, this is the point I tried to make in the video. Torchlight was heavily affected by the market with everything happening, even with the good news of the merger, everything happening, yes. And there's a few other things I do want to go over about why I don't like Torchlight as I do like buying into Meta Materials. Now I understand you can get that bonus if you buy into Torchlight and it changes into Meta Materials, yes, but I believe Torchlight is a higher risk overall compared to just buying Meta Materials on the OTC. Now if you can't buy on the OTC, then I guess I understand grabbing Torchlight if you want to play this, but it seems a bit risky in my opinion. So look at Meta Materials really, really quick. This is very interesting. So even through that dip from February 19th, right? From February 19th, we have continued an uptrend. We have not seen a downtrend start forming yet. We have continued to ride this uptrend, the OBV. All the volume is still sitting on the uptrend. So Tyler, why do you talk about this? One, it's a little bit cheaper. So let's say they do merge and the stock starts to rise. You're going to get your value and it's going to be a safer play here on Meta Materials. So let's say you think eventually this is going to be a $10 stock. You're still making quite a bit of money if you're looking at Meta Materials rather than Torchlight. Now, with Torchlight, I understand, yes, you're saying they merged, the price is going to be the same, it doesn't matter, yes, yes, yes. But what I'm saying is in the short term, before the merger, and it's looking like it could take all the way to June 30th, it might be before then, but that's what they're saying the overall cap or the end of it, this time period could be, and you always need to prepare for the worst, especially investing. At least that's what I do. I prepare for the worst. I mean, not financial advice, do your own due diligence, whatever, but that's what I do. And this is just kind of to reiterate where my mind is here. And I've mentioned in the previous video, I like Meta Materials. I think it has upside. It's similar to a company I like, CPSH. That's something I am very interested in. But long term, right now, especially with the state of the economy, I'm not looking at these smaller plays. That's just me personally. I have a few of the smaller ones. It's just opening myself up to risk. But Meta Materials, I'm saying if between Torchlight and Meta Materials, I think Meta is a better, safer pickup right now before the merger. Why? Because if we look at Torchlight, it's being affected by how the economy is moving. Meta is not being affected at all. You can see as the Nasdaq was dipping, what happened with the Torchlight. Obviously, it was getting dropped down majorly. We'd hit from this local high at about $4.85 all the way back down to $1.90. Now, I understand the whole economy was getting crushed. But if you're looking from an investment standpoint, it's clear that Meta retained its value. Just looking at these charts right now, yes, I understand they're going to be merged and Meta is going to be a Nasdaq stock, and that's the primary reason for this. I understand all of that. Yes, I understand it completely. But if we look at Torchlight, they could keep running back down. And I went over the chart. I said, yes, this does look kind of positive. It's looking like it's retaining and holding the support now, and it wants to get a move back up. So maybe you could make more money on Torchlight. But what I'm saying is, overall, Meta was just the safer pickup based on the charts and how it's retaining value if the market keeps coming down. And you need to know Joe Biden is speaking with China about semiconductors, and his team even said that they don't think they're going to enjoy the talks. They're basically saying prepare for something negative. Now, I'm always preparing for the worst when it comes to my type of investing. That's just what I'm prepared for. I don't like losing. That's the whole point of trading. You don't like to lose, or you shouldn't like to overall. So my plan here and what I'm looking at here is I'm not interested in Torchlight just because the overall residual risk. Even if we're looking at the both, Right now, if you had Meta, it would still have its same value, actually worth more right now compared to Torchlight. Meta looks like it could keep running and make another big leg up. That's the whole point I was trying to make. A lot of people were asking, is Torchlight a day trade? I don't like it for a day trade because it's not trading based on oil, and it was being heavily affected by the market. Because if it at least followed the oil path, it would have kept trending back up, or at least stagnated, but it didn't. I understand they're basically giving up that whole part of the business, but let's look at this quick little article. I don't love using Seeking Alpha in the videos, but you guys wanted me to cover this stuff, so I'll cover it really quick. So essentially, and how Seeking Alpha looks at it, and this is really what pushed me to really make and do the research on their oil base side of the company and really point that out why I don't think it's a day trade at all, or think the value is going to keep rising crazy, is because essentially this first statement, Torchlight Energy is engaging in a reverse merger. We believe that it's because it accepted that its assets are practically worthless. Now, like I said, they're not your basic oil drilling company or anything like that, or they weren't. And they're pretty much getting rid of that whole side of the business. Now, any earnings that come from that is going to go directly to Meta whenever the merger happens, all that happens. We've talked about that. It's okay. We don't need to talk about that anymore. But as you read this article, they go down into, they're basically investing into Meta, and that's going to be the future. And we can all agree on that. That part of the company looks very, very good. This also had me very concerned. When you see them doing these direct offerings and their price is extremely low, it has me very, very concerned as well. $1.20 per share, that's direct offering. If we go back to the chart on Torchlight, back on February 10th, yes, I get it. We were still pretty high on February 10th. Yeah, we were actually. We were right here, $2.80, give or take, when this direct offering was given away and listed. And that price range for that direct offering was way down here. Now, am I saying we dropped that low? That's not what I'm saying. That kind of represents a floor price, in my opinion, that $1.20. But what I'm saying is that this was a big catalyst for this stock to come down, especially with the Nasdaq dropping as well. So this video is primarily just to clarify the overall thoughts. I don't want to lead anyone to believe that I don't like metamaterials. I've literally said in the last video, metamaterials reminds me a lot of CPSH and what they're doing in those niche type products that will definitely be listed and given to the government and doing a lot of deals with the government overall. That's their focal point. That they're going to be a private company that does big deals with these niche products. That's the point of what they're doing. It's cool. I like what they're doing. They're in a very small sector, and it looks like they're going to do very well in it. That's what I like about metamaterials. But the questions I was receiving on the channel, do I like Torchlight short term? Do I like Torchlight as a swing trade? The answer was no. Why? Because it was being heavily affected by the Nasdaq and the index is coming down. 1. 2, it's not an oil company. People kept asking, Tyler, it's an oil company, West Texas Oil. You like West Texas Oil? This is not an oil company. I had to very much clarify that. Seeking Alpha basically says that's all worthless, but I had to do my own due diligence and show you guys why I thought that was a worthless part of the company. I didn't even want to retain and go back to Seeking Alpha, but I had to show you where that synopsis came from and kind of what other people are saying as well. Seeking Alpha isn't always the most reputable, but they have some good content as well. So that's my opinion there. Now, do your own due diligence, but if I'm looking at Torchlight and I'm looking at metamaterials and I want to play the merger, personally, I'm just going to go the OTC route, buy metamaterials, and just hold that. That's what I'm going to do personally. If I'm looking at these two, Torchlight just has more residual risk. Looking at metamaterials, I don't believe it has much risk. Just look at the chart, look at the trend. Even with the economy being crushed, metamaterials retained its value and actually increased in value. That's what you really want to see. So let's say the economy starts really bumping back up. That's an indicator that metamaterials is going to absolutely skyrocket. Now I get it. If you want to take the more risky route and you want to see if Torchlight holds its value, maybe that's a good play for you. I don't want to take that risk of the stock collapsing down to $1.20, especially from those $5 highs where everyone was talking about it, to make another 20%. That just doesn't make sense to me personally. That's just my opinion because it's dropped massive amounts from that $5 range. This is just my opinion. Again, do your own due diligence. I hope I clarified some stuff there. Metamaterials is a solid base company. Again, I want to keep reiterating this. So go look at CPSH and look at my videos based on CPSH. That's how I think of metamaterials. I think CPSH is further ahead, but I think they're kind of a similar company. Now, it's different products, but kind of same field and where they'll be focusing on. That's just my opinion. But that's going to wrap this video, guys. If you get something out of this, hit the sub button down below. Leave a like. I appreciate all the love and support of the channel. Have a good one, boys. Namaste. Check. The grooves in my